Good morning, trading world. It is January 26, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. Stop trying to rationalize the irrational. Again, everyone is trying to give reasons as to why the market is doing what it is doing. I have a saying on market strength and internals. Anytime I saw a gap in order flow on internals, I would render the market irrational. And whatever the position or whatever I was trying to do or take, I would wait until the gap in order flow was cleared and I considered the market back rational before entering or doing whatever it was I was trying to do. During these periods, I stopped trying to figure out what was going on or even stopped believing intraday indicators, because during these times, indicators could say one thing, but price action could and often would do the complete opposite. You could literally see price action rise while the indicator fell. Because of the lack of fundamentals, professional money managers chasing pretty charts, and market makers having to remain delta neutral, all intraday charts are basically irrational right now. If you are unsure of your risk, it's in best practice to remain patient and stay out of risky positions until the market is rational again. Here is a great example of irrational. Hyatt. Look at the run-up on the Hyatt stock. All right, we see the recent run-up on the charts, but let's take a look at the data, the facts behind the chart. All right. One of the most important things that I look at is PE ratio. And let me do a double check, because you can never really trust. Thinkorswim has gotten to the point where you can't really trust the numbers. They're out of sort on their vendors, but let's go take a look at PE ratio here, which says it's a 91.89. All right, a PE ratio of 91. Here it says 90, but either way, do you think that this stock supports a growth rate of 91? I'll answer that for you. No. Also, every Hyatt I have gone to in the last 2 months has been almost empty. Now, let's look at the book value per share. It's down, negative 1.7 and change. Let's look at earnings per share, dividends per share, all of it down. The only thing that is up is revenue, and that's a lie. The reason that revenue numbers are a lie is that if you cut expenses and expenditures, things like layoffs, which a lot of people have done lately. You can make less money as shown by earnings per share and still show an increase in revenue. So what is the reason for the run up in stock? There is no reason. It's just irrational behavior. And if you take a closer look at other stocks having these crazy pops and drops and vice versa, this will also explain the crazy reaction with those two. Even though this is a great short, you need to be careful because the market can remain irrational longer than your pockets can remain solvent. So be careful on that. Let's get to the key levels of the day. Alrighty, here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance from 402 to the 403 area. Queen resistance from the 404 to the 405 area, which is going to be major today if we can break through that resistance area. And then our King resistance 406 all the way up to the 410 area. And as you can see, just above it, there's another shaded area almost exactly at the 410, which is one of those supply demand zones that I have highlighted. On to the support side, our Jack support is going to be 400 to 399. Queen support is going to be 398 to the 396 area. And then our King support is going to be 393 to the 390 area. The main thesis for today is a small bearish bias closing below the 435 with a projected target low of between 399 and 394. I'm going to make a correction. Let's go ahead and extend that down to that 390 area. Then we have our alternate thesis. Our alternate thesis is bullish, closing above the 435 with a projected target high of between 400 and 410. I don't really expect to get to the 410 today, but it is within reach this week. The main channel we are in is 397 up to 416. The main channel below is 397 down to 379. Yesterday, market strength and breadth gapped down, took a moment to consolidate, then went on a tear to the upside. I expect a gap up at the start with some follow through, consolidating for some time, then waning for the rest of the day. We have dissonance between, we have harmony between our technical side, which is bearish, and our quant side, which is also bearish, which gives us that extra confidence to go short at highs of day today. This brings us into our scenarios of the day. Give me a moment while I bring those up. All right. Our first and most probable scenario of the day is going to be our expanded range day structure. We can have an initial push up to resistance, consolidate for a while, chopping back and forth before chopping back down for most of the day. We're going to chop back down, and then probably later in the day we're going to see a kind of reversal or push back up toward the previous close, the second half of the day. So that is our expanded range day structure. All right, the next two scenarios are pretty much a toss-up. We have our trend day up day type structure, which means we open gap up and start with a pushback toward the previous close, represented by the blue line. And we find support on or before that previous close, then begin the uptrend for the day. We usually find our midday chop around either the possible queen or king resistance. And then at some point today, or not always, but usually we may start the second half of the day with a head fake looking to continue the previous or primary trend of the morning. But at some point we kind of reverse and we get a fade back toward the close. This is our trend day up day type. Our last scenario, but not least, is our rounded reversal day type structure, which is kind of gaining ground as we get closer to the open. But with the rounded reversal day type structure, we could get a continued push lower toward the jack or queen support and find midday chop around either the queen or king support before going back up with the same energy or force we went down with the first part of the day. Now, the reason that this is gaining ground is because of the vice versa scenario. And what the vice versa scenario and what really just almost kind of lapsed my mind is that we do have some economic data coming out. We have home sales. Actually, the most important, we're going to have GDP at 8:30 a.m. and then jobless claims also at 8:30 a.m. and then new home sales at 10 a.m. So that's going to kind of throw a monkey wrench into how or where we open. So the vice versa scenario could kind of speak to that, and we could get a rounded reversal that looks like this, where we have a huge continuation on that push up to get us up here toward the queen or almost the king resistance area. Find our midday chop around one of those, and then with the same amount of force or energy that we went up with, we would come down with the second part of the day. So that is our rounded reversal day type structure. Those are the things that I will be planning for, and I hope what I said was helpful. I know in my trading it helped me a lot to stop trying to rationalize the irrational and just step back, let it do what it do, and don't get in the way of it. Just let it play out and then put your positions on after it is played out, because you'll have a much clearer view of what's going on. If you do decide to play positions during that irrational period, you must, all importance, must know your risk. And as I say each day, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position. And then we manage that risk in accordance to our account size. So when doing those irrational positions, make sure it's something that you don't mind losing. It does not break the bank. And I recommend doing spreads, something that has a a defined risk amount. And that defined risk amount is okay to lose. It's kind of like when I go to the casino. I have a budget. I have a certain amount of money in my pocket that I don't care if I lose. That's what I go, to the casino for, to blow that money. It'd be nice if I win, but it's already in the mind that I'm going to do something so risky that I'm not depending on it to have a good time. I can blow that money. So you want to look at those positions that you take during those irrational times the same way. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.